Good day, everyone. This is Jordaan speaking. I'm the Chief Executive of Superior Gold, and I am joined by our Chief Geologist, Ettienne Plessis, today. A bit of background of the company. It's a single asset business operating in WA. We've gone through quite a significant turnaround program over the last few quarters, and we have a very strong and well-defined growth strategy to take the business back up to 100,000 and beyond ounces per year. What in essence we have is a unique opportunity to unlock the value in our underground mine, which will be the mainstay of the ore supply to our mills. At this stage, the business is ore short, and therefore unlocking the value in the underground is a significant strategic challenge for us. And maybe I'd like to hand over to Etty to explain a little bit more about the underground and how that's positioned in our strategy going forward. Etty.
Yeah, Chris, as you said, thank you, gentlemen. Plutonic is the bulk of the gold that we mine is from our underground. It's a mine that is already 30 years old. It started in 1995 with underground operations, and we are focusing on the gold that is related to the mine Mayfield package. I don't know.
Chris, Etty, really good to be talking to you. This is the first time that I've spoken to you. Chris, you joined the company just 3 months ago, didn't you? Sorry, 1st of July.
No, in fact, a little bit longer. Yeah, 1st of July, yeah.
That's right. So we're coming up for 6 months. You've had a hell of a induction into the company. Etty, when did you join the company?
I've joined the company 18 months ago, but I've also worked at Plutonic about 10 years ago. I had another 4-year stint here at Plutonic. So I came back for some unfinished business. Fortunately, Superior gave me another chance to have another look at the geology and have another go at it.
Oh, excellent. Okay, so just put things in context. A year ago, in December 2020, the company put out a PEA, which was the path back to 100,000 ounces. One of the key elements in that, when I went through the PEA, there were a whole variety of scenarios on how to tackle the resource, because what you've got at Plutonic is you've got this a big structure, you've got a large resource base, and associated with the PEA was a new mineral resource, wasn't it? And it was, can you just kind of give me the headline numbers on the resource and what the PEA was looking to do? That would be kind of, I think, a useful starting point, just so we can calibrate the conversation.
Yeah, sure. So let me quickly address that. Firstly, just looking forward as a start, we're in a process now of redefining our resource and reserve, and in Q1 next year we will announce a new resource and reserve. As it stands now, our reserve is around about 380,000 ounces, and if you look at the total resource, about 5 million ounces from inferred all the way through to measured.
And you're currently producing around 20,000 ounces per annum, aren't you? So that's kind of a run rate. I think your full year guidance is 70 to 75,000 ounces for the year.
Yes,
but
yes, it's about 75,000 ounces, yes.
And you'll be looking to take it up to 25,000 ounces per quarter.
That is correct.
And that extra growth, that extra 5,000 ounces a quarter is principally coming from the underground, kind of the increased development from the underground. And
yeah, it's the underground, but also augmenting the underground feed with somewhere between 45 and 50% of open pit feed. So we are in the process of mining some of our previously operated open pits on our property. We've now mined Plutonic East, or A4, and we're now into Perch, which will see us through till, I guess, around about March next year.
Forgive my ignorance, because I mean, it's a complex story. You've got this, you've got a significant underground infrastructure. You've got the old open pits. When I looked at the PEA, there were a number of scenarios, and one of them involved kind of moving all of your plant and all of your machinery, and it wasn't cost effective to do that. And I think the scenario you went for was scenario 3, which was to do a pushback, but not to move the plant number 1, PP1, process plant 1, which is adjacent to the pit. And can you just, in terms of kind of resource, explain to me what that pushback gives you in terms of access to kind of what kind of resource chunk, and how long will that run for?
So we're looking at about 357,000 ounces over 6 years. So it's about 60,000 ounces a year that we hope to extract from the open pit. Look, it's a very early stage project. There's quite a bit of work we still need to do with regards to drilling and understanding the resource better. We're going to go through all the necessary process steps to be able to understand exactly what the most appropriate way is of accessing that ore in the open pit. It's certainly going to be a key feed for our process plant. And I think it's also important to note here that the open pit will be mined in ultimately to feed the process plant number 1, not the process plant number 2. Because as you know, we got a 1.2 million tons per annum mill, which is currently in care and maintenance.
Yes. Yeah. So, I mean, let's put process mill, the PP2 on the back burner for now. So let's just kind of think about the feed for PP1. So that the PEA on that main pit pushback was at a PEA level, and presumably you're working to go through PFS and then to get that into kind of a construction ready or decision ready. Can you just talk to me kind of the timeline and the work streams that you've got on that, just that bit, the open pit?
Yeah, sure. We're in the process now of going through the heritage surveys. We're just going to take another few months to be able to complete that. That will enable us to access certain sections around the perimeter of the current pit to do the necessary drilling, and Ettienne can expand on that. Once that drilling is done, we'll review the block models and then ultimately come up with the best pit design and cost-effective pit design that we think will work. Hand in hand, we will go through engaging with the authorities insofar as what our plans might be and the options that we have going forward. We will certainly be looking at the most cost-effective solution, and as you quite rightly said, moving the mill is probably not something we will strongly consider going forward. It's probably going to take about 18 to 24 months, very early stages, to get through that process. In the meantime, we're looking, as I said, at other open pit feed options for process plant 1.
And when you talk about heritage land, I saw somewhere in your presentation materials, or perhaps in your technical report, that there was to the west of the pit there was heritage area north and heritage area south. Is that part of the planned pushback? Okay, so
that is correct. Yes. And the way that we deal with and engage with our traditional landowners, and in this case, the Jordaan group or Aboriginal Council, is firstly to get approvals to move into that land. Number 1. Number 2, there's a heritage survey that needs to follow, which makes sure that we understand fully what the impact will be of the drill work that we need to do. And once those approvals are given after the heritage survey, we then start moving in and doing the drill work.
Your expectation is that you'll be able to get in there over time.
Yes.
And that it'll 18 months to 24 months will give you the ability to incorporate those ounces, let's call it 360,000 ounces, into the life of mine that goes on beyond that. But in the meantime, as you said, you're targeting other satellite pits, and you've got existing production from the underground infrastructure, and you're doing exploration outside of all of that.
That is correct.
The 360,000 ounces in that phase 1 pushback are not part of your current reserve because of the PEA standard. So the headline figure you gave me was 380,000 ounces in your current reserve. Is that?
That is correct.
That is correct. Because the bulk of the material that's caught up in this PEA pushback is still in inferred category, so they're not a reserve as yet.
The PEA that came with a resource model, that resource, the existing resource, is dated from when? Is it come from mid-2020?
That's correct, yes. And that resource model is what Chris was referring to, is being updated at the moment. And we're busy with our final calibrations in preparation for the statement, as Chris said, we will release in one.
I saw one of the things I saw in that original resource was that it hadn't been constrained to geology, and that one of the key changes was kind of linking it to geology. That the prior resource was not done to geology, so I think that last one was done to geology, was constrained by geology. So what are the major changes between that 2020 resource and the new 2022 one? What's going to be incorporated? What are the key areas? What are the key differences?
The 2022 that we're going to report next quarter is taking a different approach to this whole resource modeling method. We are focusing a lot more on spatial location of the ore zones. This is a pretty complicated deposit at Plutonic. It's multiple lodes stacked and with not too much continuity. So it's not a classic shear hosted Archean system, but it sits in Archean rocks. And what we've done is we've changed the approach on how to model this by using every inch of information that we do have and place that in space structurally, and also using some chemical controls better, and then run the estimations over the top of it. And so that's the major difference we've done. We've also reduced on the estimation side. I don't want to get too technical on that. On the block sizes to get the resolution of where the gold really is. So you don't dilute it in your block estimation already, so you can't see it where it is. So you give the engineers a much better idea of how they then size their equipment to the geology and not try and fit the geology to the equipment, which commonly happens.
But what block size are you going down to?
Oh, we go down to 1 meter by 1 meter blocks. That's the resolution we go. And then we will block up 2 years to the equipment selection. So we go down to resolution, yeah.
And your minimum mining width is what, 2.2 meters?
Underground minimum mining width 1.5, undiluted, yeah.
Wow. How do you get mechanized machinery kind of into that? I mean, I thought
that's for long hole stoping. It's when it's steep, okay, and when it's flat. Obviously, that is the height of your machine. Yeah.
Okay. I noticed somewhere in the resource they talk about a range of cutoff grades between kind of 2 grams and 4 grams, and that depends on the orientation and the.
Yes, absolutely, and also distance to the mold. Everything else involved with that. Yeah.
Now, if I share the screen and pop this up, this is. Can you see that?
Yep.
Yeah. Okay. So this is. I mean, look at that. Wow. Can you talk me through this slide, please, so I can kind of understand it better?
Okay. Right. So, stop me if I get too technical. What you see here is we're looking towards the east. So we're looking from west to east. North is on the left, and what you see on the red and the yellow on the left, that is an overturned portion of this mine mafic unit, and that is called the Timor and the area 134. And where you see that it says Baltic Gap and the little holes that were drilled in there and this western mining front. This is into a gap that there's a plan view that shows this also. This western mining front is an extension to the west of this main and favorable host called the mine mafic. So,
so that's not
that
it.
one.
Sorry.
Yes.
Oh, was it that one?
No. Yes.
Yeah, there we go. Okay. So on the left row of drill holes that you see there, significant intercept. So that's the western mining front, as we refer to it. So that's an extension of this mine mafic towards the west, and there's still opportunity and potential for us, and that's why we're focusing that, so that we can try and establish new mining fronts in virgin ground and actually start proper mining in a proper sequence and try and reduce our reliance on the remnant mining that we're currently doing.
So just to be clear, the green is the modeled mineralized mafic, which is the what you believe, or the modeled host, the modeled old ore, and the red is the remnant that you can mine out.
Yes, that's correct.
Okay, so, and so this is
you go.
The red is the remnant, and so these are dipping to the southwest. Is that correct? So these are deeper. If I go to this one, so all of this has had a lot of it mined out, and this is the existing infrastructure.
Yes.
So you going back in and kind of finding the pockets that haven't been mined out, and you've got these two major ramps, one through there and one through there. You've got twin decline access. Is that right?
Yeah, that's correct.
Okay.
So why we can do this remnant mining as well is, remember, a couple of years ago, 10 years ago, the cut-off grade of this mine was between 5 and 6 grams a ton. And that's now been reduced because of gold price and costs. And that's why there is so much mining or remnant mining opportunities still left.
Okay, really interesting. Thank you. I also saw somewhere in one of your presentations that the deposit had 11,000 ounces per vertical meter on the resource as a whole. Is that a historic figure? Yeah,
that's a historic figure. That's what it had. And it's also depending on where you are in this deposit. Where it's flat dipping, it won't be the same. And where it's steep is actually where you get in the Timor some very, very nice ounces with high grades as well.
I mean, that's an astonishing figure. I mean, because that's a huge amount of gold per vertical meter. So obviously you want to be targeting those kinds of structures, those kinds of that kind of endowment in the future. When you talk about getting your ore tonnage up, is it increasing the number of headings you've got? What are the kind of the mechanics behind it? Is it more development? Is it more headings, or is it targeting high grade, or a mixture of everything?
It's a mix of everything on an old mine like this. But no, we also increase towards the latter half of next year. We are increasing and ramping up our development rates to open up more ground. That's how you increase that. And we are also tackling and moving into these new areas that we've actually drilled this year and that we've made a couple of press releases on, that you guys have seen recently.
Yeah, I mean, the last two news releases are spectacular.
Just to give some numbers towards that. Currently, for FY21, we've mined 100% remnant. FY22, we're heading towards between 25 and 30% new areas, which is a significant step from where we were over the last few years. And it's testimony to the great work that Ettienne and his team has done in really understanding what those new areas are that we can go in. Needless to say, with that goes quite a significant improvement on productivity. We're also going through a process of recapitalizing our fleet to make sure that we can get the right performance levels that we expect from our machines and the underground equipment. And we're going to start seeing that, as E.T. said, towards the latter part of next year as we start ramping up the underground mine. That all sounds eminently sensible, and it's coming through in the numbers. I mean, you guys have put a turnaround together, so the quarterly numbers, it's delivering quarter by quarter is absolutely what every company should do if it wants to be re-rated, and you guys are absolutely doing that. That's fantastic. Somewhere so when I look at a whole bunch of reports, I can never remember where I saw a number, and I've just written it down. But it talks about 10% dilution in the model. Is that 10% dilution in underground mining? And in other words, tell me a bit about dilution, please.
Well, the dilution that we get underground, that's what we plan, and we do CMS all our stopes and actually reconcile back to that. Yes, there are some stopes that actually perform worse than that, but then there are also stopes that perform better than that. And it's all depending on this type of stope that you draw, where it sits, and if it's steep or flat, and that influences that dilution assumption, which is based on a calculation on historical data, yes.
And just coming, I know I went down a rabbit hole on the block size on the resource, but where does the new drilling, because you put out the last couple of news releases have been some pretty good, I think, if I understand it correct, step out drilling on new exploration ground. Where does the cutoff on the data come for the incorporation in the new resource? And tell me a bit more about kind of what's going into that new resource? It's not just the remodeling on the block size, but you're incorporating new data as well. Can you explain a bit around that? That'd be great.
Oh, it's incorporating, as I said, all data, and other than just the new drilling, also by revisiting the whole mine. Previously, the face data was not given its true value, and especially the orientation from the faces were not properly included, as far as I'm concerned, because of some constraints the guys had in trying to get a model out very quickly. You know how that works on a mine. And what we've done right now is we've remodeled the complete mine using all our face data, all the face mapping data, all those measurements, all the structural measurements, all the oriented core data was included in this model. And we believe we've got a spatially much better model of where the ore sits, because it's not a single shear zone with great continuity. This spatial orientation and placement of the different ore zones are very, very important. And that was the major change that we've had. What we've also done, I believe, as part of our reason for the multiple press releases that you've seen, is we take a staged approach in our brownfields exploration. So we go out, you build your model, then you drill your model first. And you don't go in there with the drill program and you sit there and you shoot them out with a fan of holes. You stage it. So you drill a couple of key strategic holes, move the rig somewhere else while you wait for your assays, reinterpret, remodel, make sure it makes sense. If it's not right, if you missed, why did you miss? Change your model, change your interp, and test again. And that staged approach, I believe, is actually a key reason of why we see what we saw this year.
I think, Ettienne, that this is quite pertinent as it relates to Indian access. And the challenges we had there, historically, where, it was very difficult to find the gold, and you've been very successful in following exactly that staged approach to be able to deliver the results that we have now.
Yeah, we went in there, for instance, we drilled a couple of holes, they came back nuts, and sat down and said, well, why did it miss? Then we drilled 2 holes to determine the geology better, because we realized the dike model was not good enough, and then remodeled the dikes based on those 2 strategic holes. And now after that, now we're actually hitting the targets much better.
Let me just pull this up. Is this what you're talking about?
No, that was an earlier one. So that was last year in 2020. I think it's the release that went out 2 days ago.
Yeah, it's the latest release. It's got the detail and the right pictures and so forth.
Okay. So you're strategic about where you put the drill holes. So you go in there, you work out the orientation, you wait for the assays to come back, you incorporate all the data, you go and do something else, and then when you've got the idea on the position, then you come back in and you drill that area out. Mm-hmm. Chris, just coming back to you started off by saying we got 380,000 ounces in reserve and a 5 million ounce overall kind of resource. It's a huge disparity there.
Yes.
And in the new resource, have you targeted kind of a change of the overall envelope of mineralization? I know that there's been some exploration as well, but is it fair to say that the 5 million ounces isn't going to change by a huge amount, but you're going to be targeting the 380, targeting that 4.6 million ounces of resource and trying to kind of get it closer towards that reserve figure? Is that part of the thinking in that resource recalc?
Well, we certainly hope so. And it's certainly our intent to move as much as we can into reserve, because that ultimately is the best indicator we have insofar as our life of mine is concerned.
Yeah.
It's very difficult to say exactly, what the quantum of that would be. I've asked that questions to ET probably about 20 times. I see he's smiling. He's very reserved on what he thinks it's going to be. And I appreciate it. It's very important we go through the right process. We go through all the right steps to validate and verify the numbers that we'll be going through. We are also bringing in an external reviewer insofar as that resource and reserve is concerned, to make sure that we have an external view that, that it's not only us, staring at our navel and saying, well, this is what we think it is. We want to make sure that the numbers we put out there are numbers that we can back. But E.T., I mean, could you expand on that as well, please?
Yeah, I mean, that's a question we quite often get from anybody looking at us and say, why do you have such a large resource base and such a small reserve? And as we've noted in our 43101, the resources are calculated at a cutoff of 1.5 grams per ton. And we've actually included all pillars in the resource. So it's a resource in the ground. It's not necessarily applicable to our mining method right now, but that's also the challenge to the engineers. How can we access those tiny little pillars still sitting next to existing old stopes and access that? So that's one of the main reasons why there is so much more resources than reserves. And with this new method of using all the data in the database, it's actually opening up a little bit more opportunity for us that was previously actually ignored. And the guys are looking at accessing some of those areas now.
When you're looking to access quick and low-cost ounces, of course, it'll be the remnant blocks which are on existing infrastructure. But when you putting together new, big, high-grade extensions to the mineralization, if I pull up this that slide again, that one slide, where's it gone? Which are the bits that get you on here? What's the bits that get you most excited, E.T., about? Do you see kind of lots of potential down this Western mining front, or where do the geologists talk about on the Friday evening with a beer?
No, look, this Baltic Deeps that's been sitting there for a couple of years, and then the guys are looking at, and we've started actually accessing that right now with the decline coming down in there. The areas where you see where it says Baltic Gap, we've started to develop heading into that. So that's what we talk about on Friday evenings on the bear. And the ones on the Western mining front, we've had a very, very good success there, and actually extended a very nice high grade, let's call it a shoot or a zone in there. And we can't wait for Carl, our mining planning engineer, to start developing towards that. I think he's actually started planning for that next year, accessing that. So just above where it says Baltic Deeps and Baltic, where you see those little red holes in there to the left of that. So there's a very nice zone that we identified. It fits a model that we use and that we're revisiting after all the research that's been done at Plutonic, where we get this northwest control of the high-grade areas. And it seems as if we're getting this thing together now. We understand it a bit better. We can get some continuity out of it. And we're very, very excited about that. So that's obviously a lot of pop talk for us as geologists as we build our model. Even after 3 years, you learn that you don't know it all, but you have to keep on looking.
Yeah, you've got to keep on going. What's the resource? So this is currently within the resource, but without infrastructure. Yeah. So that's an existing resource, and you'll be looking to add to it here and here, and through here as well. Okay, and great.
All the way up here. So we've got some targeting going on for next year, and going on and chase more of these high grade shoots on the western extension of the mine. Yes.
Mm-hmm. Great. So you've got 5 million ounces in resource. I mean that's a huge resource, and obviously we want to try and just drop that off. You want to bring as much of that into some kind of mine plan as much as you can, even if you. I mean, what's a thumb suck estimate when you look at it? Do you think we're going to get half of it in? Do you think you're going to get 1/3 in, a quarter, 2/3, 3/5? Friday night.
Asking me this question all the time, mate. At this stage, because we've taken a brand new approach on how we model, it's definitely, unfortunately, we're not going to tell you what it is. I'm busy calibrating my models. With any new modeling method that you try, you have to calibrate that. And we've actually selected about 6 months worth of stoping to use as a calibration tool in our stuff or in our models. Should we come up with the right number? Chris, sorry, but that's the answer to this.
No. That's the right answer. The key for us next year is, as we progress with our mining activities, specifically in the new areas that we'll be going in, as well as the remnant mining that we'll be doing next year, it's going to be very important for us to do the appropriate validation of the model to make sure that, in fact, it stacks up. We have done some testing. We've agreed as a team that we need more, and that's what we're going to do next year. Once we get a better view as to the reliability of the model, we'll be in a much better position to start doing our longer term planning, which will be a subsequent piece of work that will follow after the resource and reserve statement has been completed, as well as the new life of mine. So it's believe you me, we're all sitting on the edge of our seats. We would love the next few months just to move, past really quickly. I think in Q2 next year, we'll be in a much better position to understand exactly where we're going with the mine. But at the meantime, we're not sitting on our laurels. We're pushing as hard as we can to move an edge towards that 100,000 ounces. There's a host of other benefits that's going to come from that, and it's all part of our growth story.
Chris, I'm so respectful of the quarterly delivery that you've achieved since you've joined, and of course the work that Tamara's doing beforehand. And
absolutely, yes, Tamara's done a great job.
So I completely get where you're coming from, ET. It's good. It gives us something to talk about. It gives us a reason to reconnect in the middle of next year when you've had a chance to go through the numbers. Just, thanks for taking me down a description of the geology and the orientation of those blocks and kind of your work in progress. Perhaps kind of coming back to the top level, Chris, can you just remind me, what are the key things to be looking out for next year? What do you want the market to see month by month, quarter by quarter for the first half of next year?
Well, I think what's going to be important for us is, of course, the announcement of our resource and reserve statement. We'd like to back up the last 3 quarters of really strong performance with hopefully an improving performance. There's a bit of shutdowns that we need to do, as you do with process plant, in the first quarter of next year. So it's going to be a challenging quarter, but we're looking forward to the rest of the year with some great performance expectations. And we'd like to see our cash balance improve. We'd like to see our cost dropping off. The key here is moving from around about 75,000 ounces to 100,000 ounces is not going to draw heavily on additional fixed costs. So we hope to see quite a significant fixed cost dilution towards 100,000 ounces. So lower cost, more ounces, better cash flow, strengthening our balance sheet. The new resource and reserve statement is going to be, critically important. And then ultimately, how we're going to put the longer term strategy of the business together. The one thing that I'm really excited about for next year, which of course is going to be quite a technical challenge. We spoke about the PEA, we spoke about the main pit. One of the challenges that I put out to the team when we started going through the opportunity review when I joined was to say, are there potential early entry options into the main pit? So in an area which is already licensed, where we can get in really quickly, we can get early cash flow out of the main pit, not wait 2 years before we start getting cash flow out of it. And we're busy firming that up, but I'm very excited and hope very soon to be able to be in a position where I can share with the market how we're going to access a specific portion of the open pit as an early entry option, and hopefully as soon as next year, start seeing that all flowing into the process plant.
Chris, with your background and track record of a turnaround guy, I support you all the way on that one.
Yeah, it doesn't always work, but we're going to give it one hell of a go. I think there's what really gives me confidence is just the quality of people that we have and the ecosystem that we've been able to build around the organization, specifically when it comes to solving difficult technical issues. But the one thing or the one common theme at Plutonic, it is a complex resource. It is not straightforward. It's a resource that from time to time can be very unforgiving. What we're trying to do with all the work that Ettienne is doing and his team is doing is trying to increase the probability of getting the predictions right, going in the right areas, and getting the right grade of gold. And that's the story of Plutonic for the next few months.
Thank you very much. I've got a couple more questions, if I may. One is sure. Costs and inflation, and how are you seeing that happening? Because there have been some recent capital costs which have just blown out. People are under, even the headline inflation numbers are coming through as 5-6% in places like the UK. Are you seeing cost inflation coming through? How are you handling that? And is that just something you factor into your numbers?
Yeah, well, there's two types of cost. The one is compressible and controllable, and the other one is incompressible and uncontrollable. So it's really about focusing those costs that you have control over, those costs that you can compress. And for us at this moment, where we are in the journey, it's a volumes game. We need to get more ore out of the underground, more open pit ore, because we're not mill constrained. Get the mill humming as hard as we can, and that will give us the biggest benefit from a unit cost perspective. There are definitely some opportunities, and we're going to target them next year insofar as contract costs, etc., are concerned. One, for example, would be how we can reduce cost of our open pit mining because we're doing smaller open pits. Is there a way in which we can cluster a number of open pits over a longer period and therefore be able to, get lower rates from the mining companies that we use, because our open pits are contract mining. We're not doing it as an insourced or using an insourced model there. When it comes to inflation, I think on the labor side, we have seen some uptick. Is it significant? It's not significant to the sense that it's going to have a material impact on our cost. Our cost traditionally has been quite high. So we come from a relatively weak base, and, there's a lot of opportunity, low-hanging fruit that we can go after, which to a large extent negate, the inflation we're seeing in some of the other areas. One of the big benefits that we had is, and I don't know what that was, by design, maybe a bit of luck, just prior to the energy crisis, and where fuel prices and gas prices are going, and we locked in a new contract that's going to see us through for the next 4 years. So that's a big step and a big win for us, where we locked in our rates. So yeah, I think all in all, we're relatively in a good position. So yeah, I think that'll be my response on that front.
Great. Well, thank you both very much for your time. I look forward to having a look at the new release, the new resource when it comes out next year, and obviously the quarterly numbers. I guess, is there anything that I've missed out, Chris? Is there anything that you feel you want to get off your chest?
No. I think I really appreciate having Ettienne here. His knowledge is absolutely worth a lot for us as an organization, and really helping us to think differently about the resource. And I think it's about taking that piece of work and converting it into real activity in the mining space. And we're looking forward to hopefully an improved year next year on what we achieved now. There's no doubt it gets tougher as the rates pick up, but that's that's what we set ourselves out to achieve. I don't know, on my side, I think we've covered the key elements. Ettienne, is there anything else that you might want to raise from a geology perspective?
No, maybe just stress the point again, the importance of understanding the geology, and the devil is in the detail in deposits like these. So we use an approach called LSAM, so it's lithology, structure, alteration, mineralization. And in that sequence, so as a geologist yourself, Merlin, you'll realize how important it is to actually understand all of those four and make sure everybody on site understands that, and how you then convert that into something you can mine economically. And then that's key, and that for us as a young team is how we try and get people enthusiastic as well. and we're seeing some results up to date, and let's hope we can continue on that journey.
Well, thank you very much. And I'm not sure if I'm going to include it in the recording, but if South Africa and Australia are playing a rugby match, who do you support?
Green and gold.
Let me put it to you this way: if the Boks play, I support the Boks. Otherwise, it's Australia all the way. But I'll never support the All Blacks.
Well, for a moment, I thought you said you were never going to support England, but there we go. I'll take the All Blacks.
No.
Oh, good. Thanks.
Good. Thanks a lot. Nice talking to you.
Thanks, Merlin. You have a wonderful day. Thanks.
All right. Thank you very much. All the best. Thanks, E.T.
Thanks, Chris.
Bye-bye.